All right. Well, it's great to be here. If you're in the back, come on in, take a seat. We're in the round, and it gives a little bit more of an intimate environment on our leadership stage. Again, Landon Derentz, I'm Vice President for Energy and Infrastructure. Excited to have a conversation on mobilizing capital to build strategic projects. Who better to have that conversation than Ben Black, who's the Chief Executive Officer of the U.S. International Development Finance Corporation, the U.S. government's principal development finance institution, also coming with a rich history from industry. And of course, Mike Sabel, a friend of the Atlantic Council and the Global Energy Center, Chief Executive Officer and Executive Co-Chairman and co-founder of Venture Global, one of the largest and fastest growing LNG companies in the United States. What people may not know is he also has a rich background in finance and many things. So we have a very well-informed panel here with us today for this conversation about ultimately how do we get things built. So I want to start off, Ben, and think about the strategic case of why this moment's a little bit different. We were talking in the back, you've been on the job now for about 8 months and coming up on the 1-year anniversary, but you have a very different vision of where the Development Finance Corporation, where DFC is headed. We've heard a lot about crisis, the Strait of Hormuz, current events. Are we at an inflection point that demands a fundamentally different outlook for how we do the work you do?
It's a pleasure to be here, Landon, and thank you. So, I think the first thing to say as we talk about economic statecraft is let's look at when we were at our height on economic statecraft. So, I refer back often to the Marshall Plan, and everyone talks about the altruistic components of it, but often flying under the radar is the fact that of 70% of the funds that went into the Marshall Plan over to Europe, 70% came back to the US in the form of purchases of US goods and services. And we were able to hardwire the US system and export it into Europe and create enduring markets that have lasted for over 80 years. We are at an inflection point in the sense that under President Trump, the United States is the largest producer of crude and natural gas in the world and the largest exporter. And so, what the DFC really aims to do to meet the administration's goals and vision is four things really. We build economic ecosystems that are predicated on US capital markets, they're insulated from adversarial control, they return strong returns and dollars to the taxpayer, and they move the needle in terms of development for our allies and help develop their economies. And as we do that in this inflection point now, we are using all of our authorities, and we'll talk about that more later, but they're much expanded. I would say under the DFC right now, after reauthorization, it's not an apples to apples comparison. It's a totally different agency. And as a result, you look at things like the Ukraine Russia war, where we have stood up alongside Treasury, the Ukraine Reconstruction and Investment Fund, which is a totally new structure used to bring in private capital and mobilize it to help allies. At the same time, we are also looking at the Strait of Hormuz, and we have a lot of different authorities we can use to change the dynamic and free up choke points.
Just a follow-up question on this as I think about those investments or the Ukraine fund, for example. One aspect of this that's really important is scale. And so this isn't one-off small development projects. You're not giving up on development, but the scale of what you're envisioning in this new economic statecraft model is much bolder and larger, both because of your authorization, but also your own vision.
So I wouldn't call it new. I would actually call it a return to basics and fundamentals as far as the United States goes, predicated on the Hamiltonian model. But even more than that, I would say no. If you look through the whole scope of human history and civilization, the single component that has brought the most people out of poverty is industrialization. And if you think about that, as you build large scale projects, particularly in energy, and then in logistics and infrastructure, that is how you're going to create markets and not stranded assets that are particularly susceptible to adversarial control.
Well, as it might happen, we have somebody that knows how to build big energy projects, Mike. And so if I maybe turn to you and think about the current moment from a different lens, obviously there are some objective facts. The United States is the biggest exporter of liquefied natural gas, and Venture Global is certainly a part of that. What do you think the current demand outlook looks like? Is this crisis a bad omen, tailwinds? What are we looking at in terms of the future of the build out of infrastructure here in America?
Thank you, Landon. It's a pleasure to be here. We tend to look at much longer term, 5 years, 10 years, 50 years. The assets that we're building today will operate for 60 years. We still think that we're still in the very early stages of really the rollout of global gas infrastructure. It over time tends to displace coal as a cleaner source of production and becomes part of a blended portfolio. And so, as you have the pull, which is incredibly positive, of a growing global middle class, it's going to continue to support, provide the demand to support significant investment in the infrastructure that natural gas requires. Of course, you know, power plants, industrial demand, domestic pipelines, regas terminals, ships, LNG facilities, pipelines, compression stations, the EMP, and all the support services that are required. It's a massive, expensive logistics chain that requires a lot of capital and a lot of people to work on. But we're tremendously optimistic that for the last 15, 20 years the market's grown, gas demand has grown globally between 5 and 6%, closer to 6%. We actually see that accelerating, and so we think the world needs more of all of the above. I think the most optimistic part about it is that the engineering already exists today that allows you to do everything that I just described and deliver incredibly cheap cost of fuel that gives you 6 cent, 7 cent, 8 cent kilowatt hour electricity in Europe and Asia. And there's no new inventions that are required. It just needs everything to work as it has been.
There's no new inventions, but there is a need for infrastructure on both sides in the United States to export it, but also to have it hit markets, whether it's in Europe or Asia. And so I want to shift the conversation to public-private partnership to make that happen. And Ben, you have been on record a little bit talking about a firm belief in private capital, but here you are helping marshal private capital through public capital. And so when you sit across from a company like Venture Global, of course, you're not investing in their export terminals, but you're making the architecture of those exports real because you're building hard infrastructure around the world. And so when you sit across the table from a company like Venture Global, how does that partnership actually work for you? Like, what should we be talking about? What do people need to know in the back room here?
So, well, first of all, I get very excited about these because there's so much we can do in terms of, look, if we're going to just jump to endpoints, building regas terminals for Venture Global to ship to, as we look at port infrastructure, that's the easy answer. But maybe we take a step back. And so I talked about the reauthorization a little bit before. When this passed at the end of last December, really it turned us into a $205 billion organization where if it comes to energy, critical minerals, or technology, we can invest anywhere in the world now. And the caps that were there before and sort of classification by country is no longer playing a part for that respect. So it is a totally new organization that can really lay the groundwork across the board for this. When we talk about all of that, and so just to go to the 205 billion, subtract out previous commitments, and basically on a 6-year reauthorization, we'll be spending $30 billion a year, or more than Abu Dhabi's sovereign wealth funds combined on an annual basis. So it's a huge amount of investment capital that can be put to a lot of really good work. And as we think about that as well, 205 is an enormous number. China's Belt and Road is 1.5 trillion. So if we were to go at it with a state capital only approach, we'd be not only dwarfed, we would not work as well. But the fact of the matter is that system doesn't work as well as the building of markets. So what we try and do is we can invest across the capital stack from senior debt to minority equity. and our insurance product to boot. And as we do that, we can bring in private capital to fill up the stack. And that's a much better capital stack as we're private, the DFC is in there, and we're incentivizing private capital to come in and make it pencil. We like to say we're a returns oriented organization, not a risk adjusted returns organization, because we have strategic goals.
So a lot of tools, debt, equity, insurance tools. Um, when you're actually talking about unlocking investments and getting these private sector opportunities across the finish line, this isn't, you're not filling a huge gap, but you're filling the last mile to make sure that they become real.
It depends. I mean, look, there are going to be certain projects where the capital stack from the mezz up pencils, but maybe the equity doesn't for a fund's returns needs. I mean, look, if you believe solely in the invisible hand, there's no reason for public capital to exist at all, except the strategic projects we need aren't getting done otherwise. And sometimes it's a larger slug of capital, and that's what helps to incentivize the private market to come in.
So, Mike, I won't hold you just to DFC, but let's put this in application. How does a company like Venture Global look at public investments and public capital to help a company like yours reach even further than it already is?
We like the focus where it is today, which is on developing and supporting the demand side. Projects in the developing markets, but certainly in the United States, uh, if they really have all the qualities of a economic project, has no problems attracting the private capital. There's enormous amounts of capital, and the constraint is not capital. It's really permitting, regulatory certainty, and then you'll find essentially unlimited amounts of capital to support that. It really is on the demand side where there's less certainty, where the capital isn't there. So regas terminals, on the other side, storage, pipelines, power plants, industrial uses. 50% or more in a lot of markets of the demand is not for electricity; it's for other industrial uses and consumer uses. And so those are hard assets to build and develop in certain countries that have fundamental demand for it, but they need support. And the DFC focus on that is a great thing for our allies and people around the world and raising living standards and enhancing the energy security of the United States, but also of friends and allies around the world. So that's a great role for that, and we're excited of the support from the Trump administration and the brilliant, successful people that could be doing lots of things and are donating their time to support this.
Okay, so step one, U.S. taxpayer dollars going internationally to build infrastructure has value to America and our own energy security.
Yeah, no, absolutely, right. It's all the innovation and capital that's invested in the drilling revolution in the United States has made us, as we all know, an owner of several hundred years of supply of gas and oil, and but it's way ahead of really the infrastructure that's required around the world to build it.
Maybe I can put a geography overlay on the infrastructure that needs to be built. I think I see you internationally, certainly outside of DC, more than I see you here in Washington, and so I'm curious, where do you see that this infrastructure actually needs to get built now?
Well, pretty much I mean, all countries have demand for gas. And so if you don't have access to pipeline gas, you need to bring it in as close as you can with regas terminals and pipelines. And so it eventually brings almost all markets um, into focus as an opportunity. And the the as I was talking about before, the existing engineering has made gas fairly competitive with coal, and so as a part of a fuel portfolio, it's incredibly attractive because to make electricity, it's competitive, but it's a requirement for certain industrial and consumer uses. And so I think the whole world is a legitimate opportunity. It'll bring economic wealth to countries that don't have it today.
I want to kind of keep building on this topic in terms of the geography. You've talked about critical minerals. You talked about energy security, Ben. I know that there's about what 5 different core areas that DFC is particularly focused in. Maybe you could build out a little bit on the geographies you're focusing to. It could be global. Not trying to limit you. I'm just curious when you wake up in the morning, who's typically a phone call with? Is it Europe? Is it Africa?
So look, I think under the Trump administration and the president has really been focused on the Western Hemisphere, and I think this is incredibly important as we develop this out. By 2030, 44% of new demand in global oil and gas is going to be met by Western Hemisphere countries, Argentina, Brazil, Venezuela, Guyana. And that infrastructure needs to be built. But I also want to jump on a point you were saying before as we go there. You know, building out the infrastructure, especially for ports, power, pipelines, regas terminals, is absolutely important for the United States because, as Mike's pointing out, we have all of this gas. And if we're just using it for our own domestic needs, then that's going to be a lot fewer jobs working inside the United States on getting the gas out. By building out the infrastructure globally and serving those markets, we create a greater supply of jobs domestically. And that's incredibly important too.
To put a little bit of extra math on that, just our company alone, the total balance of trade impact is going to be a couple $1 trillion over the life of the assets. And so you think about historically, not that long ago, where we were an importer of all our energy, that capital was all leaving the country, and now all that cash is coming into the U.S. and compounds. So the impact is enormous on the balance of trade and the economic growth of the country.
Okay, so we've pretty much have a well-founded economic argument for why DFC's mission exists, why companies have private partnerships to build things. But what we haven't confirmed yet is, are we building them as quickly as we can? And if not, what's standing in the way? I think the LNG sector in particular is a little bit maybe I'm not going to call it an outlier, but certainly more advanced in terms of getting things built over the last decade. That's not consistent across all of the United States. What are you looking for from a corporate standpoint in terms of how we build even faster?
Yeah, the challenge to all this now is because the innovation has been achieved. It's all about just the raw management of the supply chain, the people, the permitting, and just the execution of the complex construction projects. And it takes time, and because they're big, a summary of scopes of one phase of our project will have 80,000 scopes, hundreds of thousands of control systems. So these are just enormously complex undertakings. A single facility will have more than 100,000 people in the whole supply chain that touch it in some way before you're done. But having said all that, I think the hardest part is still permit and regulatory uncertainty, and we need to remain very cautious and worried about protecting what's really good now. I'd say we have the best permitting environment in decades under the Trump administration, but it's delicate, and there's a lot of room to make it go faster, still be fully protected and fulfill all the requirements, but it can be done much faster than it is. We would have for Venture Global, we would have significantly more LNG in production right now if permits had gone faster.
And I'd say on the other end, that becomes an issue too. I mean, look, the United States, especially right now, the permitting environment is fantastic. But think about all over the world, there's often questions of political risk and all that. And now I have to go into my insurance salesman mode, but the DFC has a product called political risk insurance, which is probably the best mobilizer of private capital and making people secure with being places. So an example I'll use right now is Argentina, where we love the opportunities in Argentina, and the Malay government is a great ally, and we believe strongly in it. The Vaca Muerta, when ginned up and getting going, looks to like it's going to produce 1.2 million barrels a day. And adding that into the energy mix will be fantastic. That having been said, the 100-year history leaves a lot of people concerned. What if there's a political change? And that's where political risk insurance, which we can write, completely changes the dynamic. we take the place in terms of risk of the payor. Premiums are paid to us as an insurance mechanism. We can write it for up to 30 years, so it fixes the risk of takings, of regulatory issues, and everything there. And then what it also does is it makes any project internationally much more leverageable because instead of a B minus rated country's credit, the credit to your project on your payer and your receivables is now the United States government. And so you've just cut your borrowing costs by 4 or 5%.
I want to expand on one other aspect of what
400 or 500 basis points. Yeah.
one other aspect of what Mike was building to. He talked about people, he talked about policy, and he talked about systems and the complexity of them. And I do think whether this is because of your perspectives and bringing that vision to the DFC or your teams, I've heard a lot of discussion about these being more than just a single transaction. That you're taking like a systems approach to thinking about how you approach investment. So political risk insurance is one tool, but when you take on a project like the Vaca Muerta, are you also thinking about it from a lot of different angles? So it's not stovepiped in terms of how the DFC is processing these opportunities?
Absolutely. As opportunities come in, and look, in my career, I came up looking across capital structure. And I think that's the fundamental. There is no perfect capital structure at any one time. What you want is flexibility and optionality. And as different projects come in, we like to be able to work that way. And, I love this. I'm at a place where I can speak in basis points. I keep getting told only use percentages these days.
Well, he has a background.
But, look, we're not going to be 50 bips smart on something necessarily, but to be able to move across the capital structure and say, hey, this is riskier. We're going to baseline this at 8 to 10%, but we can move here and it's going to be cheaper, but you're going to have a lot stronger covenants restricting what you can and can't do, how your baskets work. It just gives a lot of latitude to how we look at it. And we're acting as a full stack financial institution when we do this. And then we're bringing in partners who can play along with that.
So let's talk a little bit about the infrastructure that has to be built, in your opinion. Then, so we're talking about process, we're talking about the systems. When you look globally, what firm hard infrastructure are you hoping to see really develop in the next 12 months, 24 months of the Trump administration?
Well, okay, when we say develop, Mike's made a very fair
investment into getting things and projects moving.
Okay, look, I'm going to stick to ports and regas plants in particular. You can do pipelines from there, and then you get into mining. I mean, see, this is one of the really nice things as you talk about the continuum of where this works. You want a mining project, and the U.S. is getting offtake for that. It requires a lot of power, and if you're in a country that does not have that level of power, it all starts with energy first. It is the most important thing here, and then there's so many varieties of what you can do from there. Once you get your gas turbines, if that's what you're building off of, obviously pitching towards natural gas, we like that. You can make lines to the mine and making sure that operates. And at the same time, you're providing consumer electricity and developing an entire consumer market rather than just an extractive model that you might see more from Belt and Road.
Are there particular geographies in terms of those ports, or where do you feel like where are you going to put some emphasis to that geographically?
So we're talking Western Hemisphere. I'd say, the Indo-Pacific, especially on the port side, parts of Africa, and then, I would say from Eastern Europe to Central Asia. Now, some of those are dry ports, some of those are ports off of the Caspian and other areas, and then obviously down into the Middle East as well.
I've seen in my travels, in particular in Eastern Europe, I was with some of your team in the 3Cs initiative in Croatia, a desire for greater economic partnership with the United States, especially at a time where the strategic calculus of how we're engaging, say with troop posture is changing. And so the economic opportunity of building those long-term relationships is really real. And so what you're doing is clearly having an impact around the world that way as well. Mike, LNG has had an impact around the world. This is a conference on the geopolitics of energy, and energy shapes geopolitics as much as geopolitics shape energy, right? And it goes both directions. And so The United States is a massive LNG exporter. By 2030, it's going to be even bigger. You're building an energy legacy here. What do you think the next chapter of American LNG looks like? Where are we taking this?
Well, I think, as I said a minute ago, we're in the very early stages of the build out of global gas infrastructure. And as you build more of that, the markets will become more liquid, more tradable. The end users can go directly to the producers. Costs will continue to come down, which will create more and more demand. As Ben was just describing, when you build power plants or gas infrastructure to support a mine, for example, uh, once investors around the world, industrial investors, see available electricity and power and fuel, they come pouring in to innovate and make investment that just lifts the standard of livings and creates even more middle class demand and improves the quality of life for ultimately billions of people. You're going to see Africa, I think, accelerate in infrastructure and creating demand. You're going to see their domestic gas exploited, and I think I'm tremendously optimistic about Africa. I mean, we talk about Asia all the time, but I think Africa is going to surprise people.
I've made you pretty passionate about this in a private conversation we had before, so I just want to, with Iran happening right now, with countries thinking through energy security, uh, you're still pretty bullish on the gas future, and I think it's an important thing to drill down on. Right, we're going to hear a lot about, for example, India pushing forward with solar and storage. Uh, what what gives you the confidence that gas remains such an imperative to the global energy mix?
Well, the challenges that we're experiencing in the gas markets today and the oil markets have nothing to do with it being oil and gas. It's just geography and politics. And so there's plenty of alternative basins for oil and gas beyond the Middle East and beyond the United States as well. And the combined industrial and electricity uses of gas will just make it a core part, and the fact that it's much cleaner than coal will make it a core part of countries' portfolios. And as long as you have a growing global middle class, you're going to have demand for gas. And it's it's really it's all it has been playing out for the last decades. It continues to accelerate, in our opinion. It's going to accelerate. There is a lot of consensus around an oversupply in upcoming years of LNG and gas. We never saw it. We think that the markets will in the future do what they've done historically, grow at 5 to 6% a year. The oversupply um, analysis assumed that growth rates and demand were closer to 2%, 2.25%, and that has not historically been the case. And so we thought the market was in balance, and in fact, the market is probably going to be short materially in the early 2030s.
Well, it's a good thing because we got a lot of gas coming into the world's market. Uh, Ben, I want to come back to you on one final point, building on something that Mike talked about earlier, which was the durability of the policy landscape, and in particular for him, a big compliment for getting permitting moving quickly under this administration. I think the fact that you have the DFC reauthorization shows that there's a bipartisan vision and support for your institution. And so, how are you pursuing, whether that's nuclear, where we have a lot of bipartisan support, a enduring program at DFC so that congressional leadership, political leadership sees the value as you two have articulated incredibly well long into the future?
Look, so at DFC, we have an all of the above energy policy. Obviously, as the world's largest oil and gas producer, we want to do things that are to the advantage of the United States. Like when people come in with solar, and it's interesting you mention India because this is the one caveat to the question I often ask in return, which is where are the project's solar panels being purchased from? I think it's a little difficult as a United States government agency to fund projects where you're buying hundreds of millions of dollars worth of Chinese solar panels. Now, the Indians are coming up the curve there to be able to produce more panels, but the reality is right now, that's a Chinese owned market. Hydro, on the other hand, is something we talk to people about all the time. So energy mix and energy needs really depend on the country at hand. But obviously, we're big proponents of liquefied natural gas and natural gas in general.
Well, that's great. Gentlemen, unfortunately, we're coming up here on time, and I just want to end by thanking you on this conversation and bringing some real honest discussions on how we're mobilizing capital to build at scale. I think that there's clearly a strategy, and it's bold. I wish you great success, Ben, as you continue to lead the DFC to move that 30 billion a year effectively, and Mike, of course, with VG, continue to grow your export portfolio.
Great, thank you very much. What Ben is doing over at DFC is extraordinarily revolutionary. To have this level of sophistication and creativity is going to have a huge positive impact for the world. It's unprecedented.
I thank you both.
Kind of you.
And if everybody would join me in thanking them as well. Following this fireside chat, we'll have on the leadership stage here a conversation with Stephen Kobos, the CEO of Accelerate, chaired by Roger Dewan from S&P. Thank you, everybody.